Good morning. uh, Sorry, guys. I just had to troll Ted really quickly on X. Yeah, we were already kind of showing some weakness under the surface for the Nasdaq. I don't think that massive of a deal. You're starting to get some underperformance in the Nasdaq versus the IWM. We will kind of see how that digests this morning. But PPI came out a little bit hotter than expected, and we'll see how this sticks. But a lot of names, they could easily bounce, undercut yesterday's lows and reclaim. But for the most part, you're getting them kind of acting a bit heavy on PPI, coming in quite a bit hotter than expected. And that will affect PCE. We'll see what happens. Yeah, Wolf, nice data center news this morning. I don't know that. Here's the reality of that trade. It's a pair trade, right? So it would actually be IWM long, QQQ short. So even while the Russell, so like for instance, if you were long the IWM yesterday and short the Nasdaq, you would have made no money. You would have effectively made no money in the Nasdaq because it was down, or it was flat on the day. But you would have made your money on the IWM because it was up 2%. And even the day before, where the QQQ was maybe up, I forget exactly what it was up, but the IWM outperformed as well. So the idea is it's a pair trade. And I don't think that the IWM is going to underperform what the NASDAQ would do. So like, even if the NASDAQ pulled back, right, let's just call it 6 or 7%, it might only be that the IWM pulls back, 3 or 4%. So you kind of have to run them together as a pair trade. And just based on positioning kind of lets me know that, that's probably a good trade for the next few weeks until positioning is not so crowded. Yeah, it's hard to imagine the Russell being this shorted underperforms what the Nasdaq's doing. Hard to imagine. I think the trade is good for a few weeks until positioning is neutral. I think the trade is long Russell, the IWM, and short the QQQ. Right? If you want to do it a little bit faster, it would be long TNA, long SQQQ, or long or short TQQQ. I think that's the trade. Why didn't I buy KTOS on Friday? You mean here on 8/8? Is this what you're asking about? Because for every one KTOS going up on earnings, you've got a million stocks getting killed after a gap up on earnings. So, looking at a chart in hindsight and saying to yourself, oh man, I knew I should have bought it. Well, have you looked at the other 85 stocks that have gapped up on earnings and then completely sold off? Yeah, PPI very hot, coming in higher than expected. Entry points for TNA Nail and LabU, my assumption would be against an ascending moving average. Yeah, I don't think it's that a big deal. Guys, if you look at the daily on the QQQ, we're still vertical. Like even this drop here on the NQ looks like nothing, right? Look at the daily here. Forget about what the hourly's doing. What's the daily look like? Guys, we haven't even pulled back any at all. We've literally pulled back nothing. Like, what is this? So what is a pullback for ants? Haven't pulled back at all. Yeah, I personally am being a little bit more cautious on the stocks within the Nasdaq, and that's because it's it's a crowded market. It's crowded to the long side. So I'm a little less weary in pullbacks in the Russell because it's crowded to the short side. Yeah, nothing wrong at all, Brian, with the NQ. So you look at this vertical move, and then everybody's like, oh my God, what's going on with the NASDAQ this morning? It's like everybody's panicking and freaking out when all we've got is this little blip lower and it doesn't even register on the daily. It's like we're at prices not seen since Tuesday afternoon. You know what I mean? So we haven't even pulled back at all. Guys, the market's up like 40% off the April lows. People just have a lot of recency bias. Any thoughts on Rambus? Yeah, it's fine, but I don't really love this setup going into the left side peak. A little more digestion here. Why is Ethereum leading over Bitcoin? Positioning has a lot to do with it. There's a very crowded crypto on the short side. I'm gonna stick with my Roblox for now. I'm gonna stick with the idea of short Roblox. There are others, right? There are names that have been lagging, like this GRRR on earnings. You get the pop, you start to fail the 50-day around 19 and a half. Could be decent. How do I use COT data? It's very simple. Look at large and small speculators or align yourself with commercials and wait for some kind of news failure, right? So if a market is super, super longed, right, that means small and large speculators are piled into something. And then you get a piece of news that you would perceive to be good news. And then you expect the market to go higher on said good news. And then the market actually finishes lower. You now have a lot of longs in something that is now going lower, AKA they can help the thing go lower when they sell. Yeah, with earnings, I like to see them raise forward guidance. I like to see accelerating earnings and sales quarter over quarter for a few quarters. Those are pretty important. Otherwise, I don't really care much more about earnings than that. Um, I just also care that the stock that I'm looking at is in a good sector, right? Because that's where half of its price appreciation is going to come from, directly from the group it's in. Um, yeah, that's about it. That's all I really care about. How can you overcome the scaring for missing profits? You took UNH on reversal and confirmed higher low, but I sold around 260, thinking I might miss profits. My actual target was 280. This is hampering my account growth. Any suggestions? Yeah, take a smaller time frame moving average and trail it. Right? You're never going to sell the tippity top of something, nor should you want to, unless you want to catch a parabolic move. You'll know what that feels like when you're in it. Right? Price is really accelerating away from daily moving averages, right? And then even on a smaller time frame, it's really accelerating from 60-minute and smaller time frame moving averages. It gets very, very euphoric if you've ever caught a parabolic move, right? Like I remember I sold AMD at 225 the day it topped. Um, Not all of it, but a nice chunk of it. And you'll know what that feels like when you're in it. But what I suggest is using if if you're kind of in a stock like UNH, which is below daily moving averages, use hourly moving averages. So, and they're lagging anyway. Those are their moving averages are lagging indicators, right? Price happens first, and then the moving average slowly trends behind it. So that's what I would suggest. Use lagging indicators. That will help you. Yeah, you're not going to sell the very top on something. And also you shouldn't really keep price targets. Right? Let price do what it's going to do. Too thin. Absell. let's see, what group is this in? ABCL. Biotech. Well, I'll tell you what, it's kind of in the right group right now. I think biotech can do really well in an environment where interest rate cuts are coming. But I don't know that I would buy an individual biotech name. Like, you have to know if they've got PDUFA dates. You got to know if they've got cash. You got to know how long that cash runway is. You have to know if they have any shelf, registrations open. Like, you got to know if an offering might be coming, right? Like, it's just, dude, I've been in situations where it's like you're up 100 grand on a biotech going into the night, and like you're going to sleep. And you're like, ah, cool. I'm up 100 grand on this position. And then I wake up in the morning and I'm down 100 grand. I've been in that scenario before. So it's like, it only took me being in that scenario and then getting caught in an offering a handful of times for me to be like, yeah, I'm done trading bios. Unless, of course, they're like very well established companies, right? Like, a Lilly, which I own from $300. So that's kind of a different scenario for a biotech. But you don't really want to, if you're going to own a cheaper name like this, you want to know everything about it. You need to know everything about it. You need to know, if they've got drugs in the pipeline, when they're due to present, pretty much everything, which is why I hate to trade them. I would rather just trade like an ETF related to the biotechs, like LabVIEW, right? Moves fairly fast, maybe not as fast as ABCL, but something better than nothing. But if the whole group is working and going higher, you kind of put a barrier between yourself and offerings, right? A particular company can get killed and it's not going to affect, your ETF at all, as long as the rest of the group is acting well. So, yeah. So in terms of the peeling off part, before I start to really trim up my position or trim more systematically, I'm looking for 3 to 5 day pushes on my position, right? So I'll buy something from a tight consolidation area as it's coming out of there. And then I'm looking for a 3 to 5 day push, and obviously how quickly a stock moves will also depend on, how I want to trim. So if something just moves, call it 4% per day, and in 3 days I'm up 10%, I'm up 2.5 times its average daily range, from my entry effectively. I want to, take some off into that, right? Completely de-risk the trade. And now I can use those moving averages that are lagging and that are ascending on the rest of my position. When a stock gets 7 times its average true range from the 50, that's when I start to sell in 20% increments of what I have left as we get extended from the 50 day, which is why I don't like to buy extended from the 50 day, because then we're kind of sitting in my trim zone. So if you're already extended from the 50, right, once you get 7 times its average true range from the 50, historically, we start to get a little extended 7 times, 8 times, 9 times, 10, 11, 12, 13. And I want to make sure that every average true range above the 50 after 7, I'm trimming 20% of what I have left. Sounds good, babe. What happened? Really? Yeah, the idea is you have to trail. If that's how you make up for all your small paper cut losses. I'm only right, 35 or 40% of the time. So, but when I'm wrong small because I set my stops at the low of the day on days that I buy things. So, and then I'm only really looking for 3 to 5 day pushes. Anything after that is a cherry on top, but I stay really patient with my positions and I just let them work. Right? The last thing I want to do is choke off trades early. Women are much more patient, dude. They tend to be better traders. Sounds crazy, right? For some reason, I've noticed, with the guys that I've talked to in the past or the people that I work with, like men are a bit more impatient. I don't know if it's like the DraftKings mentality, like very instant gratification, but women do a better job kind of waiting for the reward. I'm not even kidding about that. They're just more patient. That's why I try my best to just use the moving averages. Don't try to outsmart them, right? Just let them work, right? And that gets you in a situation where, like, I've been in ARC for well over 2 months now, right? I've literally been sitting in this thing since 6/6. Right? You just got to let it work. No, I didn't take a long on AMD, but boy, I am watching it. It is acting amazing. What do you think? I was thinking about trading end of day, last hour feels less stressful. Well, here's the thing: if you buy something in the last hour of the day, you know exactly what your stop is, low of day. And so you can size in things a little bit smaller to maybe compensate for that, but you also get a bit more confirmation if it's going to close above prior day high, above the weekly resistance, etc. And you get a better idea if it's actually breaking out. So did I get into Wolf? When would I have bought Wolf? I normally don't buy pre-market, right? When would I have bought this thing exactly? I did not. Sometimes, if it's just still going through my pivot end of day, yeah, happy to. Yeah, very happy to buy things at end of day. The key really for me mentally is, even if I'm buying something towards the end of day, I like to think that I'm going to have some cushion on it overnight before I hold it. Right. So I don't typically just buy things at the end of the day with the expectation of a gap up. I like to buy something and I like to buy something and then it give me a little bit of a push throughout the day that makes me comfortable holding it overnight. I don't really think too much of it, to be honest with you. It's down 1.3% right now, but it was up 2% the day before and 2.5% the day before. So, it's given back maybe a third of its gains in the last 2 days, and with how crowded it is, it still makes me believe that most dips in the Russell should be viable. I don't know. Again, I think that the Russell slash NASDAQ is a pair trade. You have to basically run them as a pair trade. You don't want to just be long the Russell. You want to be long the Russell, short the NASDAQ, but you have to kind of understand your why, right? I understand why I would do it. If you don't understand why you would do it, um, then don't do it. No, I cut the last of Hood yesterday at break even. So pretty much a nothing burger kind of a trade. So $110.10 was my final cut on it.
On NIX, IX reports revenue of 13.47 million from telecommunications growth. NIXX
How much more aggressive would I be if I only had 10K to my name? I would be less aggressive. I know that it seems counterintuitive to what the answer you were expecting to hear, but I wouldn't want to be more aggressive with less money, right? I can afford to lose 100 grand, right? You don't have 100 grand to lose. You got 10 grand. And if that's all the money to your name, you need to protect your nest egg. So you need to be less aggressive, especially until you understand what it is you're looking at, how to get involved, how to find the stocks you even want to trade, what relative strength looks like, what relative weakness looks like, how to spot themes, how to view group strength, what are your entry tactics. Or if you only have 10 grand to your name, then I know you don't really know these things yet. If you did, you'd have made way more money by now, which is totally fine. Everybody starts somewhere. So you actually want to be less aggressive because you don't want to lose the money to your name and then you can't try and do this career because you need some sort of money. And now I think 10 grand's fine. I think that's plenty of money because even while you're learning, you're going to pay some form of market tuition. So better pay a little bit of market tuition with less money than to be somebody who retires at 55, with a 401k and a pension and, or whatever at 60. And then he's like, oh, I'm going to get started in the stock market. And then he learns with his 300,000 and then his market tuition ends up being, $250,000 and yours ends up being only 10,000. So, kind of view it that way. Sometimes having a little bit of money is great too. Yeah, I think it's possible. I thought it was ready to go. And I still finished out with a green trade on it. Didn't make a fortune, but keeps the lights on. It depends. If stock is breaking like a prior day high and a pivot, I don't really always wait for a opening range break. If as long as it's taking out prior day high and I know that it's in a good group and it's coming out of a tight little area. Yeah, I think Kulamagi is right. You want to be a little bit more aggressive with selling and you take the little win, sell a third, sell a half after 3 to 5 days. I still do that, even on a bigger account. What will be my cue to sell ARC? A couple of closes below the 50-day because now ARC, see this little pivot right here on 8-1, which I held through because I had already trimmed. Now the 50-day will be higher, in the next 2-3 days. So if we close below the 50-day, I almost want to use this low. And we'll kind of see how it's acting, when we pull back again and build a new base. But I'm hopeful that we just digest here. Just digest and go sideways for another 2-3 weeks. Yeah, so Milo, you want to make sure that you're using progressive exposure, meaning you're getting more exposed. You're getting more exposed as things are working for you versus more exposed when things are not. Right? Like if you have a $10,000 account and you buy, something for $1,000 or $800, if you take a little loss, your next trade isn't for 1,500, right? Your next trade is for $1,000. And then if you take a little loss, then your next trade's for $1,000. If you lose a couple in a row, it's probably not you, it's the market or the stocks you're trading. And so you got to size things back, right? Size down. And you can get way more aggressive, when you're seeing things well and you're getting follow through. Usually in a really good market, the market gives you follow through all on its own. You don't really got to press the issue. Guys, I got to grab my breakfast really quick. Hang in there. Thanks, my love. All right. Oh, yeah. Good morning to me. No, I think Marios is awesome. Marios is very, very bright, and he has the right idea. Nice. Yeah, I think Marios is great. The less you push during choppy market environments, the more money you make. You need to not push during choppy market environments. You need to take your foot off the gas pedal and you need to do less. The market does it for you, man. The market makes things very easy in an uptrend. Very easy. But I've said this before. I'm sure some of you guys have heard me say it, and I'll say it again. The best time to buy stocks is after the stock market has had a correction, not after a 40% move higher. Everybody is trying to buy the hell out of stocks up here because they're getting FOMO. Oh my God, it's going to be like 2000 and 1999. It's going to make the dot-com bubble, look puny. It's going to this, that, and the other. That's a load of shit, right? It's like I was literally cherry picking stocks in end of April, and it was very easy with tons of traction. Netflix, CrowdStrike, Zscaler, Okta, Palantir, Uber, TMDX. You had your Sezzle, you had Dave, you had NVIDIA, you had AVGO, you had TSM, you had Tesla, you had Microsoft, dude, there were so many stocks going up. You had eventually Coinbase, you had MSTR working, you had Iron, you had it was just the sheer abundance of shit that was working would make your head spin, right? It was just so much working that, it was very Roblox, SE, RBRK. I mean, I could literally keep going. Spotify, Shack. I mean, there's so much stuff that was starting to work in late April and in May. And then all of a sudden the market had just kind of gone vertical. HIMS is another one that all of a sudden things got choppy, right? Choppy, very difficult. And then I started to say, and even on these streams, looking to buy pullbacks into ascending moving averages seems to be the way. And then we got to this earnings quarter and it's okay. A lot of shit is gapping down. FTNT, Zscaler, Coin, SMCI, Sezzle, Dave, Duolingo, and a lot of names started to gap up on earnings and then start to give it all back. And if you're not paying attention and reading the room, right, that's like that muscle in your head that it's a situational awareness. If you're not reading the room properly, that's how you chop yourself up. No. Today could be a potential add on Tesla only if the market were to start to turn back up. But go on, what's the issue? The market hasn't even really pulled back. Right? I just showed the NQ. Look at the daily. This shit is vertical and it's crowded to the long side. So if it's vertical and crowded to the long side, how are we supposed to really gain traction if everybody who can be long is long? It's likely we need more chop, more digestion, more nothingness. And then maybe it'll go later. Right? But to be a buyer of any little pullback when the market starts to pull back, I don't know that that's the right idea. Right? You don't want to be buying stocks when the general market is going down. Could it be that stocks come into their, 20-day, 50-day, undercut that level, start to reclaim? 100%. I think that that's completely possible. But trying to force the issue, I don't think it's smart, right? One stock at a time. Take it one stock at a time. Yeah, sometimes I'm risking less, dude. Sometimes I'm risking like point 0.2, point 0.3, right? There are times when like I'm not getting a whole lot of traction and I'll take like a 5% position knowing that I'm willing to add, 5% to that position down the road. And my stop might literally be a 3% stop on a 5% portfolio position. Even if it were a 3% stop to low of day on a 10% portfolio position, I'm risking zero point 0.3. But if I'm taking a 5% position, now you know my risk less than 0.2. So like I'm being meticulous because in a hot market, you can get a 10% position on, and then another one, and then another one, and then a name you really love, and that's a 15% position, and then another 15% position. And then the names that you're in have a little pullback to the ascending 10 or 20 day, and then they bounce from there, and you can add to it. So you can really, get aggressive quickly in a good market. I don't like to buy stocks when they're more than 4 times their average true range from the 50. So if a stock moves, call it 4% per day, once we start to get more than 16% away from the 50 simple moving average, I'm a little bit more thoughtful about buying. So I don't show up to buy 16, 17%, 18%, like 4.5 times its average. Fine. We can get away with that. But when you start to get 5 times, 6 times, 7 times, especially with like large caps, doesn't really work. Small caps, you can still get away with maybe 5 times its average true range from the 50 because those names can extend a little bit further. But I don't like to get very aggressive. Amazon didn't even flinch during this market pullback. There's a lot of strength in Amazon. A lot of strength in Amazon. Yeah, that's kind of how I view it, right? No more than 4 times its average range from the 50. Yeah, it's a choppy environment right now. That's it. You saw it, in the kind of if you guys watched the Watch List video last night, you saw it in the power generation names, right? Where you see a GEV. And how long have I been saying this for anybody who's been watching the stream for like 3-4 weeks now, right? You get a vertical move like this. What does GEV need? Go back to the last time it had a vertical move like this, right? After it has a nice long extended move like this, you need a new base. Here's a 7-week base for you. I would not be surprised if GEV is going to do the same shit right up here for 4, 5, 6, 7 weeks. Anybody who's been in this stream long enough knows I've been repeating this over and over and over and over. Yeah, I don't want to put too much emphasis on small cap plays, but I know that they're definitely playable if the IWM kind of does what I think it's capable of doing. Right? I believe that the Russell, which by the way is still to me acting just fine. Like guys, we had a pullback in here. Right? This looked kind of nasty, didn't it? 5 days in a row of a pullback. How do we know the Russell can't pull back 5 days again and this time just bounce off the 50? So like I personally think the Russell looks just fine. It's back above the 200. My thinking based on positioning is that this thing does want to go higher, 24.5 or something like that. And then from there, who knows if it breaks out and we still stay crowded on positioning, it could lead to a really nice move for the Russell. I agree with you. I know. Yeah, I do like Chris Camillo. I like Chris Camillo because he's an out-of-the-box thinker. But his trading methodology and strategy is totally different than mine. Right? The biggest moves in stock market history don't occur below the 200 simple moving average. They just don't. They never have. They never will. Right? Stocks that go on to move thousands of percent are above their 200 simple moving average. Like think about Palantir, since 2023. It's been above its 200 simple moving average. Right? It didn't make a big move while it was below it. It never has. So, he's got a thesis though. He trades off of, having a thesis. With that said, I was at the mall with my fiance 2 weeks ago, and I spent $1,000 at the mall. I didn't buy any Lulu. We bought Viore. My fear with Lulu is they've got tons of competition, tons. COHR. A lot of names have been doing this. Holy cow, this thing's back in the 90s. What the hell? No, we didn't buy AEO. That's another one too. As soon as this squeezes out, this is going to make a fantastic short. Don't know when that's going to be, but well, that's the thing. It's like I am a trader, so I want to make sure that I'm in things that are actually in an uptrend, right? That's the thing. I want to make sure that I'm in names that are in a legitimate uptrend. And them being above the 200 simple moving average and them being in a stage 2 uptrend is important to me. If they're not, I don't feel comfortable. Right? It's like I like Chris Camillo and I also like the short bear, right? How many people know the short bear on X when he was buying, United Healthcare? I know he wasn't buying it here, but he was buying it like, down here or wherever the heck he was buying it. And then it goes a little bit lower. Like, okay, fine, he's holding it. He's got conviction. His plan is different than a lot of other people's, but I know people on social media who bought this trade because the short bear's in it. And then they end up taking a loss on it because they oversize it too early. They don't have a real plan with it. They don't understand the fundamentals. They don't have the patience for it. They're not sizing it properly, and then a great trader like himself, he'll end up eventually making money on it. But his trading plan and process are totally different than everybody else's. So you have to do things that make you comfortable as a trader. If you're like doing things that are outside of your like normal process, you're going to get your ass kicked. But yeah, that's another thing. They don't have the same time horizon, right? He might be comfortable holding this thing for years, right? Myself, I want to be in things that I know are in a good group with good earnings and sales and in an uptrend where I can limit risk immediately if I'm wrong, right? That helps me sleep well at night, knowing that I just bought a position and it's working in a good market, in a good group with good earnings and sales, and I've got a cushion on it. And I can get myself into 10, 12, 15, 20 names in a good market. Do I want to be in that many? No, not really. But I can size up the ones that I am in. Nah, I wouldn't. I mean, NEGG had a nice little setup, but right in here. But this wouldn't have been for me, dude. Like $32, but I wouldn't have bought it. Not for me. Insane move though. Holy shit, 109. Today might make a good short on this thing. Honestly. Today might make a really nice short on this thing. Yeah, I mean, but now you've got this 20-point gap up. This is now kind of parabolic. It's up 250% from the 50-day. More. It's up 250% from the 50-day. Any kind of a push at the morning open, this could be a pretty good short, to be honest with you. Who knows? I don't know that I'll try to short this thing. I don't know if it's worth the headache. Yep, guys, I got to get rolling. Appreciate you guys as always. You guys are awesome. There is an interview of mine coming out with Words of Wisdom that should be pretty fun to watch. Kind of covers quite a bit. I got my start, a little bit of my past. That one will be out a little later today. That should be a good one. And then this Sunday, Chart Fanatics. Please trade them safely today. Don't do anything crazy. Check out that interview if you're kind of new to following along. If you already know me, then you guys got me here. But appreciate you guys. I will see you guys all tomorrow morning. And if you have questions, please feel free to ask, guys. So most of my homework is done the night before, so I really just show up in the mornings to try and help you guys. What I like about AAOI, I like the story. I like what they do. I think they're, a new, young, fresh name that hasn't really made a big move yet. I like the volume that came into this thing on the way up. I like how linear of a move it can make once it gets going. A lot of charts look like this before they end up making big moves. But we'll see. We'll see what ends up happening, Milo. I don't own it. And I won't own it until it can get above its 200 simple moving average. All right, guys. I'll see you all tomorrow.